It's actually giving really critical feedback, but from a place that's coming from wanting that person to succeed. And so I think a lot of folks start to recognize that we have the ability to kind of help them through this process.
Welcome to Partner Path, a podcast that unpacks the venture capital and growth equity ecosystem from a junior perspective. Young entrepreneurs and investors have already had a massive impact on the industry, having started unicorns and launched billion-dollar funds. We discuss these success stories and more by sharing perspectives and advice from some of the industry's most prominent role models. This podcast expresses our views as of the date published and does not represent the views of and is not endorsed by any company for which we work. Before we get to the episode, Laura and I are excited to announce a partnership with Overlap. Fresh out of Y Combinator's summer batch, Overlap is an AI-driven app that uses large language models to curate the best moments from podcast episodes. Imagine having a smart assistant who reads through every podcast transcript, finds the best parts or parts most relevant to your search, and strings them together to form a new, curated stream of content. That is what Overlap does. I personally use Overlap to explore content on future podcast guests and highly recommend it as another diligence tool for investors. Check out Overlap on the App Store today.
Today we are talking with Leeor Mushin, co-founder and GP at Formation VC. Leeor started his career in strategic planning and finance at Noble Energy before going to GSB. Now Leeor runs an early-stage fund that invests in the formation stage of companies. Welcome, Leeor.
Thanks for having me.
Thanks for being here. So let's start with your background. If you could walk us through being from Texas and then going to Noble Energy.
Yeah, absolutely. So grew up in Texas, grew up in Houston. My parents were living in Israel and had been there most in all of their lives in my dad's case, and essentially made their way over to Chicago, made their way down to Texas where I was born. After college, went to UT Austin. I had the opportunity to work for an energy company that had discovered the largest offshore gas discovery of the decade off the coast of Israel, where my family is originally from. And so for me, the opportunity to work for a company that was based in the US, but also to kind of help out where my family is, or most of my family is, was kind of particularly exciting for me. And even more than that, I was helping with gas deals with countries my parents went to war with. And so it was very fulfilling to that end. So I was doing like business finance, corp dev, all sorts of different things for that company, and was also helping with strategy for one of their publicly traded subsidiaries as well. That company kind of shortly after I sold to Chevron for what was about a Figma.
For $13 billion in 2020?
So maybe a little bit less than what I used to tell people was about a Figma. Obviously before that transaction didn't happen, but large company, was publicly traded and really enjoyed my experience there. While I was there, I ended up actually starting a company as well 10 years ago, and my co-founder still runs. And so my early 20s were pretty busy, and that was, kind of before business school as well.
We do want to get into the company,
yeah.
But perhaps the company, Noble Energy, divested a number of assets. Did that shape your experience or perspective on VC?
Yeah, look, I joined when energy was still like kind of rocking and rolling, and then like 6 months into the job, like it was chaos.
What year was that?
It was like 2014.
Okay.
So when I joined for the first 6 months of 2014, it was great. There's a lot of money in the business. And then all of a sudden there was, we went through 3 rounds of layoffs. And so I think just like going through that was very formative. I had an amazing boss as well. She was someone that followed her around as she kept getting different jobs. And she was wonderful to me. And so that shaped me a lot. And then I think I ended up in a lines drawn in reverse way, having the founding experience, but then from Noble having this corp dev finance, like Excel experience as well. So maybe vis-a-vis some other like early stage investors, I have a little bit of that, mindset and mentality, but in a lot of situations I have to forget all about that. So.
But then you were thrown into the Valley.
Yeah.
So you went to Stanford.
Yep.
You decided to go to GSB.
Yeah.
What was the biggest surprise starting at Stanford? Because we've interviewed a lot of who were undergrad and business school from Stanford,
Yeah.
and you're just engrossed in the greatest tech area,
Yeah.
maybe in the country, the world. So I'm curious, coming from the South, having
Yeah.
roots in Israel, and
Yeah.
then going to Stanford.
The thing that I was looking for when, because, I was running this company, it was like a small business type situation, and was enjoying that. And don't get me wrong, it was a great time, but no one was really like thinking about startups in the way that I was in Houston. There's obviously very smart people, and they're kind of very good in their industries, whether that's energy or whether that's healthcare, but just no one was thinking about those kinds of things like in the same way that I felt like I was. And so immediately when you walk on campus, you're just around all these people who are like the smartest people you'll ever meet. and they believe that anything is possible. And of course, sometimes maybe delusionally so, but if anything, like I think more places like need a little bit of that energy. And so being around people that you not only like were hearing, hey, anything is possible, but you actually felt like they could do it. And that was like something that like, oh my God, like this is the coolest thing in the world for me. And so, that time and experience and being able to, get out of Texas for a little while was like extremely formative.
Did you feel that you had imposter syndrome?
Yeah, definitely. I mean, like, there's 5 kids from UT. They go to Stanford for business school, or at least that was the case my year. And, you have these kids who are at like Ivy League schools, and, I didn't get into those schools, at undergrad. And so, you want to think to yourself that you deserve to be there because you're there. But at the same time, like, there's definitely situations where you're like, hey, like, why am I here? Or is it just like a lucky thing or whatnot? And, I think over the course of time, you build that confidence and conviction. But as someone who, never lived outside Texas, like for the first 27 years of my life, like, yeah, absolutely, I would feel that sometimes.
And did you feel that it seemed like you maybe wanted to start a company going back to Stanford, but then you ended up getting involved with GSB 2020, which I believe was on the investing side?
Yeah, that was a crazy experience and how that happened. Basically, this is so like traditional, like Stanford. I even feel, I want to punch myself in the face for saying it, but I was on the way back from a Tahoe trip, and I was talking to a friend, and I was like, like in that same week, I think we'd heard like 2 or 3 different folks that had gone to GSB and said, hey, I wish I invested in my classmates. And I was like, it'd be cool if we could do that. Little did I know at the time that the reason that it wasn't possible was because of accredited investor rules. And so what we ended up doing is spending many months to figure out if this was possible. We ended up like, after like classes were closed from a registration standpoint, like begging our way into like a Stanford law school class. And I ended up telling like this person, Gordy Davidson, who's like a legal legend at Fenwick, about like the concepts of this idea. And he was like, what? I think there's a way to figure this out. And, it took a lot of work and time. But the original intention of that whole fund situation was, one, just, because we wanted to invest in each other. We felt like, you do the math, and DoorDash and Nubank and Guild Education and all these interesting companies like had come out like right before us. And we thought like, if you do the math and you can kind of capture some of that magic, then that's a good investment for all of us as well. But structuring was difficult, and it took like 9 months for us to kind of figure it out, like from start to finish. But now the cool part about it is like, it happens at Stanford, it happens at schools around the country. And even, one of my co-founders, she turned it into a company as well. And so it's been cool to see it proliferate in ways I wouldn't have expected at the time.
Where did the funding come from?
To kind of provide a little bit more context on the fund, so the only LPs were my classmates, and we would only invest in my classmates' companies. It was almost like a contained startup index fund where as long as the startup raised like a certain amount of money from a quote unquote good VC fund and we had a list, we would automatically want to write like essentially like a 50 to 100K check. And we ended up investing in about 20 companies out of the fund. The money only came from my classmates. I think the median was like $5K. So we kind of democratized investing as well. So that was like a cool bit of what we were trying to do too. And then, we ended up having like, a couple hundred classmates of ours as part of the fund. And yeah, like now the fund happens in some form or fashion every year.
That's amazing. I'm sure we'll touch on some of the strategies later that you're pulled from that experience to now starting another fund, slightly bigger. But I think we would be remiss not to touch on Digital Stairway before getting too deep into VC. So you were a founder, and the company's still running to date. Yes. When did you found Digital Stairway, and what was the company?
Sure. So 2015 is when we founded the company, so a long time ago. I was basically, for the first little while when I was at Noble, I was only working like 50 hours a week. And so I had some time on my hand. I knew I always wanted to do something entrepreneurial. And so one of my good friends from college was someone that like we were kind of ideating with. And I had pitched him on an idea that he was really into. The idea was absolutely horrendous. And we ended up kind of just working on like a couple different things. And he was living in Austin, I was living in Houston. We would either go to each other's cities on the weekends, or actually sometimes we would meet up in LaGrange, Texas, in the middle of nowhere, Texas, because it was equidistant from both of us. and they had like McDonald's and Starbucks and had like free Wi-Fi and good coffee or good enough coffee. And we were able to just kind of work and essentially like work on our idea for about a year. And so this was kind of prior to 2015.
Thinking about like digital marketing.
Yes, a little bit towards the end, but at the beginning it was like more like kind of classic like mid 2010s like consumer app type stuff. And we just killed those ideas for a bunch of reasons, like in part because we weren't the best people to do it. But maybe the idea was right under our nose. But my co-founder, like from a very early age, was the head of like a division of like a well-known like Austin ad agency. And he was talking to me about how much waste there was in the system. And I was like, okay, that's kind of interesting. Like you're working with a lot of these SMBs. And he was like, if you just kind of created some form of like agency where you're like more efficient about everything, I think there's like a business here. And so we ended up starting Digital Stairway. We're starting to work. Essentially what we would do is we would connect small and then medium-sized businesses with digital marketing talent around the country. And so we looked like an agency to our customers, but we operated like a managed marketplace because we would bid out work doing like SEO and SEM and website development and all sorts of other things like that to people that we had gotten a chance to know and trust on the talent side. So we had a couple dozen contractors that we worked with throughout the country, and we would essentially project manage the projects with these customers. And I was running this company, like I don't necessarily advise everyone to do this, but while I was at my previous company to start, and so during the middle of the day, like I would just like sneak away and like go to like fast food restaurants and like take meetings or out of my car and hotspot.
So were you meeting candidates?
I was meeting like customers and candidates, and we would schedule the meetings around like my lunch time. He eventually went full time into the company, and I was running the company, in some form or fashion through business school. And so that was, a long time where I was like actually running it myself. And then over the course of time was an advisor. And then I sold my last stake in the company earlier this year, basically an earn out back to him. It was a crazy experience in like a lines drawn in reverse kind of way. Like I worked with over 100 different businesses. We were able to run like a services business at like an 80% margin, or what might look like a services business, just because again, there's so much waste in the
managed
system.
Marketplace. And
yeah, exactly. Yeah, it was like once I started in venture, like it was helpful having worked with like B2B, B2C, healthcare, all sorts of things. But I definitely, when I was starting the business, I just thought it was a cool way to make money. And I liked helping these small businesses as well.
I'm sure fast forward and you're seeing just like the automation that's taking place in the marketplace space, and you're like, oh, I wish I had these tools.
Totally, 100%. Like even at the time, like my co-founder and I like knew it eventually like will be disrupted, but doesn't mean it's not a bad spot right now to build a business on it. I'm surprised 10 years later that the business is doing as well as it is with my co-founder at the helm. But yeah, there's all these tooling that exists now that if someone actually wanted to do it themselves, they could. And so, but a lot of people don't want to do it. They don't want to think about it. They want to give it to someone they trust. And so, there's a gap in the market. It's not like, I don't think, a venture scalable gap. And that's why we never raised external capital. We were cash flow positive like month 3. And so very quickly, we kind of made things work. But yeah, that's kind of how we thought about it.
Especially with SMBs, because it's such an interpersonal relationship.
Yes.
So when they like you and they trust you, they're going to come back to you for all of their marketing type needs.
Exactly. And that's what ended up happening. And so we expanded and grew with some of our customers as they got a little bit bigger too. And so, yeah, I mean, definitely like, and it's funny, I'm probably like net more negative on like a lot of like marketing tools that exist out there, just because like I, experienced it myself from like a venture scale perspective. But at the same time, like a lot of great stuff has come out and surprised me in ways that I wouldn't have possibly imagined.
So then you're graduating Stanford. You pretty much have founder experience, now VC experience.
Right.
And you chose the VC route,
right?
Going to Floodgate.
Yeah.
But what was the impetus to go become a associate or principal at Floodgate when you started?
Right. A little bit of an accident, I guess. So Mike had this, it wasn't like a seminar, but like a seminar-ish thing at Stanford.
Is Mike the GP? Okay.
Yes, Mike Maples is one of the founding partners at Floodgate. And he was accepting like 5 students into this little cohort of let's hang and like learn from each other kind of thing.
Valley loves exclusivity.
I definitely loves it. And I like did not think we were going to get in, but Mike was someone that, I'd always looked up to because he was born in Oklahoma, but like took a company public in Austin, many years ago. And so he was like someone who I thought to myself, like even my early like 20s was like, oh, this is someone who like made it and is out in Silicon Valley doing cool things. And so like I was always like a big consumer of all of his materials and looked up to him in that way. And so he had this like small seminar. I applied with the idea of the Stanford Fund before we even had started. And I think he just like the gumption And so he like accepted myself and one of my partners as well, who was working on it, into this like small little class. And I got a chance to know him over the course of like a year and a half or so. And at one point he was like, hey, I need an intern. I had just delayed my Stanford graduation because we were raising for the fund and COVID hit. And so I delayed my Stanford graduation to the end of the year. And because I wanted to make sure we were raising this fund, because right when we were raising the fund, like that's when COVID hit. And we ended up raising the fund and that went well. And then so by the time I was kind of like up for air, Mike was like, hey, I need an intern. The other reason that I delayed my Stanford graduation is because my girlfriend, now wife, was a year below me, and I wanted to see if there was something there. I didn't tell her this at the time because I don't know, we'd only been dating for like so many months, and I thought that was weird, but that was definitely like part of the reason too.
Yeah, that's fair.
Yeah.
Now, a quick word from our sponsor. Laura and I are thrilled to announce a partnership with Grata, an intuitive deal sourcing and diligence platform. Keep missing out on private market deals? Ditch the Rolodex and get Grata. Grata's AI-powered platform provides accurate data, deep insights, and time-saving workflows that help get more deals done. And it's trusted by over 500 firms and 3,000 deal makers, including myself. I've personally used Grata in both my deal sourcing and diligence workflows and would recommend their tool to any investor across private equity, growth equity, corp dev, or investment banking. We've negotiated a special offer for our audience. Mention PartnerPath to the Grata team during sign-up, and you'll get free executive seats for your partners and MDs included in your subscription. Now, back to the episode.
Okay, you joined Floodgate, and where you worked there for a number of years. Going in, what would you say you were exceptional at or your superpower? And like, did that change or did you lean into it more?
Yeah, I think I was pretty good at like finding opportunities and kind of recognizing opportunities before maybe other folks did. Like, I think there are some firms who, like kind of are building theses around areas where everyone kind of knows like there's interesting things happening. And I think I had a pretty good eye for, and kind of okay from a mentality perspective, like being on an island by myself. And like, moreover, Floodgate was looking for that and appreciated that about me and frankly about anyone who's ever joined the team. And so I think I was particularly good at like kind of finding these like odd opportunities, and we can talk about it later, like these ugly ducklings. And that was like kind of one thing. I think the other thing is I was like very like early on, I helped create this like exited founder community with Mike's help. And it was basically a way for us to like find an unfair advantage to talk to like these really interesting people who were 5 to 10 times more likely to start a $1 billion startup. But very few of them actually had strong affinity towards their previous VC funds because they had good, not great exits. And so we ended up kind of creating a community around this when I was an intern. And I think I ended up kind of turning that into some proprietary deal flow for the firm. So I think that and maybe my mentality of being okay with these oblong kind of ugly duckling opportunities were the kind of couple of things that helped me get the job.
But what was the incentive for those folks to join your community?
Yeah, it was COVID as well. And so people were just like looking to talk to people. I think also, being around other people who are in the same headspace as you is really interesting to people. And so we ended up starting it with like 10 or 20 people, but we seeded the network with some of Mike's network, which definitely helped for sure. And we had some other folks like in and around our areas who were interested. And we started having these weekly Zoom chats. I was like an event planner, like straight out like Jennifer Lopez.
That's how I
basically.
feel.
Yeah, exactly. Most of VC, people don't realize that most of being a VC is just you're an SDR, event planner.
Yeah.
And so I was just hosting these like Zoom chats every single week. I was maniacal about like the people we'd bring in. We'd also have these founders pitch their ideas. They would bring in companies they were advising. We'd have really cool guests on to talk about what was next in their area. And essentially we built like a nice little community around that. And I think that was one of those things that I kind of had started something out of nothing at Floodgate and turned it into a valuable asset for the firm. And I think that was something they were like, okay, this person can join full time.
Definitely. And I'm a firm believer that there's other ways to add value that aren't directly linked to just like cold outbound. Like building communities and network is a way that is kind of like interrelated with sourcing, but it's not directly, you're not being checked on sourcing metrics or email sent.
Totally.
Because that kind of leads to my next question of what would you say the percent of deals maybe at Floodgate that you all looked at came from people, personal relationships?
Like definitely a nice chunk, but I think it's less than people would think. We found a lot of deals like through like our community building, through finding like ways to like interact with people and kind of getting, hit by the lucky truck, so to speak. I think a lot of this job is doing the right things enough to get lucky. And so, and that's something that I was kind of told from my early time at Floodgate as well. Like if you have like enough good inputs over a long enough period of time, you'll start to accrue value in interesting ways. And so, yes, we definitely saw some good stuff given kind of Floodgate had a good brand, but it would be a lot less than people think. I think pre-seed and seed, and this kind of goes on to why I ended up building out a fund myself, which we can talk about later as well, but is so much of a jump ball. And yes, there's like the consensus deals, there's the OpenAI researcher leaving or whatever that a lot of people want to invest in. But there's a lot of stuff that's like pretty good that is like way more of a jump ball than I think people give it credit for. And so as Floodgate knew, you have to like continue to hustle. You have to continue to pound the pavement. You have to continue to meet interesting people in the hopes of, something special emerging.
So at that point, you're making a people bet, but you're a generalist firm. So then how are you getting up to speed as quick as you can on some of these ugly duckling or niche industries?
Totally. I mean, some of it is like when there's not a deal in process, and in some cases, like you actually have the time to learn about things. I think that helps in one situation. And in some situations, those deals, like because they're ugly ducklings, are not like there's everyone chomping at the bit. So you actually have the time as opposed to like, what was happening in whatever 2021 was like, someone would get like, we would start raising on Friday, get a term sheet on Saturday, and then like be done on Sunday. And so you actually, because we chose on purpose to take a different path as a firm, like we were not FOMO driven. We actually in many cases had the time to spend with people as they were thinking through how to best position their company as well. And so that kind of helped on one dimension. I think another thing is, look, when you're an early stage firm, you're betting on the founder and the power of the insight. Like, if you kind of figure out a way to like understand if a founder kind of works for what your model that you're getting at is, and you find someone special, and then you realize that their insight is profound and backed by interesting inflections or changes that allow this, idea to exist at this very moment, then that's a lot of good ingredients. And so then you at that point, you can feel comfortable and confident in writing the check. I think that, some of the better deals that I was involved with at the firm and even in the firm's history, like we only got the moniker of being an expert in that field after the investment happened. Mike had a prepared mind on the identity management side of things, kind of, but he was not like an expert in that side before he invested in Okta. Anne had an idea of like what the sharing economy might look like, but was definitely not an expert in it before she invested into Lyft. In a more recent investment that Anne and I worked on, like we were very interested in healthcare and still both are, but we looked at this company that was doing AI for health systems, and we were not an expert in that field. And actually, like most healthcare funds, if actually every single one except one, by the time that we wanted to invest had passed. And so that was almost a situation where like, okay, congrats everyone that had a prepared mind. If anything, they pattern matched the company incorrectly. And that gave us the opportunity to realize that the founder was special. And actually this time was a little bit different. And so that's how we thought about it. Of course, that means that there's certain situations where you're going to lose. But I think it also gives you an opportunity to win in the situations that matter more.
Were there a few things that, at the end of the day, 2021, I'm sure there were folks around the table and offering term sheets. You guys weren't the only ones for a lot of the deals. Taking a few steps back, why leave and start your own fund? It's a tough market.
Right.
There's a lot of emerging funds.
Yeah.
There's not a ton of capital just lying around.
Yeah.
I'm sure you have a good track record, but not an amazing 10-year history track record. Sure. So yeah, would love to touch on that story.
Yeah, look, I love Floodgate to death. And so leaving there was like one of the hardest decisions of my life. They treated me so well. Like, unfortunately, I don't think everyone can say that about their previous investment shops. But in my case, like literally nothing but the best things to say. I had been like promoted, I guess, a year before I decided to leave. And I was thinking about like, was I ready to go and take this leap? And so I had met my partner 3.5 years earlier before we decided to start the fund. So now like 4.5 years, before we, as basically started this fund now at this point. And it was something where like you start to think about, your equity in a given fund, and you start to like kind of play out the math a little bit. And if you feel like you could do it now and you're not scared by like the 0 to 1 pressure and you feel like you can raise money, then like, as long as you don't mind taking a little bit of a hit on salary and you're more of like a carry investor versus like a management fee investor, then the math kind of makes sense for you to take a swing. And that's kind of how I thought about it. Is like, look, I was ready. I felt like I had some good deals done. I had some founders who would like reference to me positively. We're not raising like a gigantic fund. I mean, I guess depends the eye of the beholder, but $20 million fund is not like a huge thing or anything. And so I think we've earned the right, my partner and I, through his track record and my early track record and kind of how we're thinking about things, to at least take this shot. And so it was one of those things where, I started talking to Floodgate, started figuring out my own world. Also wanted to move to New York as well, which is important to me for the kind of family reasons. And, it was kind of like all those things kind of came to head. And I realized I kind of wanted to take that swing. And so told Floodgate last year that I was leaving, left some months later to kind of make sure that, everything was in good spot. And then kind of took a little bit of time with my partner to figure out some things as we were kind of figuring out our story and whatever, and then started fundraising after that. And so, yeah, here we are. And that was the whole kind of process of the decision.
How did you approach fundraising and get in front of LPs?
Yeah, I've definitely learned a lot about that since I've started. At our fund size, we're compared to an endowment, we're their smallest check is bigger than our fund. And so when you start to figure out who's the right size and fit for you, it's mostly high net worth family offices, institutionalized family offices, and then fund to funds. My partner had been investing for the past decade. He's my age, but investing since the start of his career, direct investing out of a family office. And we got introduced through two friends in venture who were like, hey, you got to meet this guy. And he had an unbelievable track record despite having zero brand. Compared to my other venture friends who are on third and a half base compared to this guy. And he has a better track record than most anyone that I know. It was okay, this guy is pretty interesting. So we just kind of became friends and immediately jived as humans. That all to say that, he had some kind of connectivity in the family office world, given that's where he come from. So he'd done the venture job on hard mode, but definitely understood how different kinds of family offices operate. So it definitely didn't hurt us kind of get some momentum. And then over the course of time, the way that we thought about it and are still thinking about it is, you kind of earn the right to unlock more sophistication in terms of capital as over the course of time. And so at first, it's maybe just people who just kind of believe in you and just giving you money carte blanche. And then over the course of time, it's people who are really digging in to your track record, doing 10 references, and then trying to decide whether or not you're a good use of their capital.
How do you pitch your edge in the market?
Yeah.
Especially when there are quite a few emerging managers with impressive track records.
Sure.
And in New York alone.
Totally. I office with some great ones too.
Yeah. I'll have to bring them on next.
No, totally. Look, I think one of my fundamental beliefs about venture is most folks are focused on the sales part of the job as opposed to the customer success side of the job. And so what I got good at, and what my partner got good at as well, and the way that we were able to win deals, and in my case against GPs of well-known venture funds, and in his case win deals at all, given that he was not at a place with a brand, or through developing these deep relationships with founders well ahead of a fundraise. And so what we're focused on from the formation perspective is essentially meeting, the 30 to 40 people a year that matter to us and spending a lot more time with them and essentially helping them through this process. And in some cases, that's on an individualized basis. And that's, maybe connecting them with the 300 exited founder community that I used to run. Or in some cases, we run small cohorts of really strong founders that we don't really talk about that much publicly, essentially allowing them to have a space where they're kind of figuring and forming out the idea, where they can be around others who are kind of in that same spot. And again, we bring on a bunch of exited founders to help them through that process as well. And so we're really focused on that bit, and that's kind of predominantly what we do. We also kind of hearkening back to some of the stuff that both my partner and I have done historically, we'll do some of these ugly duckling seeds with traction with $500K, $1 million of traction in some cases between 12 and 20 posts. If they have to be that ugly, I guess, in a sense. And we find these opportunities, find these founders who are working on something pretty incredible, help the rest of the round come together. And in our early investing out of the fund, we have one kind of formative situation where we met the founders a year before we invested, but when they were thinking about starting a company. And we have another situation where with a founder who had a little bit of traction in kind of an odd market, where we kind of helped him through the pitch process, in the months leading up to a fundraise, and then brought on a co-investor to help us with the investment who we thought had also a prepared mind. So they raised a little bit more capital in that situation. And so we try to pitch ourselves as these people who curate a really high, strong group of individuals, and who, if we're spending a lot of time with 30 to 40 people a year who matter, and, my partner and I are only investing in 5 companies a year. So if 2 to 3 of those materialize for each of us, and they want to work with us and we want to work with them, very quickly, you force the choice versus comparison with the founders. You can work with them at a situation where it works for both parties. And that's, more than half of our deal flow in a given year. And so it kind of just like works out. And I think a lot of the difficulty for a lot of multi-stage funds, I think on this dimension is like, look, they're trying to write larger checks, understandably so, given fund sizes. They're trying to also, a lot of the situations are more consensus teams or situations. And that's why they are able to raise so much money to begin with. And those types of seeds and situations make way more sense for those kinds of firms. I think for our situations, it's finding something that's oblong about the market, maybe not fully understood, maybe the founders are not fully understood, maybe not ugly duckling level at the formation stage, but still oblong. And we spend a lot of time with them and figure out if there's a there.
What are the characteristics of an ugly duckling?
Oh, sure. So usually has some traction, usually is a team that is not, necessarily the OpenAI or Stripe team that everyone kind of is chasing and giving, 5 at 25, or I guess now more in some cases. It's usually in a market that is like odd. And so one of our investments is in public safety. And now it's becoming a little bit more known, like Prepare just raised that, Series B yesterday, I guess. And so there's it's starting to unlock the market, but that's kind of a situation that we like as well. It usually has some kind of meat on the bone in terms of traction, as I mentioned. So it's kind of a couple different qualities.
When sourcing people, how are you, going back to the word the edge, getting them to come on board? Because a lot of the funds now have similar type programs or communities. I mean, South Park Commons is a good example.
Yeah.
They bring folks in and are really pushing them to ideate and to iterate quickly.
Yeah.
How are you sourcing these individuals? Are you, I think about it, at least in my world, going to kind of the cloud infra companies that we really respect, top enterprise companies, and then meeting the engineers and developing relationships there with the hopes that the VP of Eng at Ramp might go start a company someday.
Right. So usually, our folks are typically not necessarily that level, because usually that person can raise 5 to 10 or more. And so it's more situations where maybe the person's a little bit younger, or maybe they're, again, working in a space that's not known. The way that we think about it is structured and unstructured. And so a structured example is yesterday, 2 founders who came out of my exited founder community, both had good, not great exits, are thinking about their next company. And so that's kind of built-in deal flow for myself. My partner and I, have invested in kind of a nice chunk of companies. And so there's definitely some good people coming out of those companies as well. We've built, I think, a little bit of a brand, at least amongst investors as well, especially later stage investors who know that we're particularly good at this. And so I think that also is good flow, especially as, as someone who might be still needs a little bit of baking to do, so to speak. And so we can kind of help them in that process. And we've developed some trust with some kind of key parties. And so we're getting people sent along that way as well. Sometimes we'll have thesis, or not even so much theses about spaces, although sometimes it does go that far. It's more inklings about spaces. So as an example, my partner was really interested in the intersection of technology and biology, and found out that there was this group of people who were amazing in this space. And we just spent a lot of time with a lot of the folks, realized 2 of the folks were pretty special. And that was our second investment. And sometimes we kind of do inkling or thesis-led sourcing, where we have an idea for a space, but it's not just posting something or talking to just the premier top of the top people. It's figuring out where the next generation of founders and actually doing something with that thesis. I think a mistake I see some VCs making, at least in my opinion, is that they publish something that's actually pretty good, and they maybe talk to 5 to 10 people about it, and then it kind of just dies, and they hope that they just get some residual value from it, in some magical way. We actually take those things and present it to people and try to really find and spend time with the groups and communities who actually will value that writing and value those thoughts. And that kind of is our excuse to spend more time. And then from there, we try to kind of infiltrate a network so that we can know who's good or interesting that's coming out of there as well.
Do they let you infiltrate because you're not just the random VC? You're the one who is having a personal relationship. You have thoughts, opinions, at this point, experience.
Ideally, we can point to things in situations where people have kind of come through our orbit. In some cases we've invested, in some cases not. It's really important for us to have as near perfect NPS as possible. And so that doesn't always mean hey, everyone's amazing. It's actually giving really critical feedback, but from a place that's coming from wanting that person to succeed. And so I think a lot of folks start to recognize that we have the ability to kind of help them through this process. An example is a company that my partner and I met a year ago before we had the fund, but we were investing together. And that company was unable to raise for their seed. And even the founder, after the fact, said, hey, if it wasn't for you both, I don't know if we would have been able to raise the seed. Well, the company was great. It was just more of a question of communication. And fast forward, that company, has 10x, gone from 1 to 10-ish of revenue in a year. And I think it was one of those situations where like there's a really interesting business there. The founder was like really compelling in a way, but like needed to like translate some of the speak to like VCEs. And that's an example where we can kind of like point to where if a founder is like, hey, I'm struggling or I'm thinking about a space, like here's like a founder that we can put them in touch because the founder like has a good enough relationship with us and they can be like, yeah, like if it wasn't for them, like I feel like I would have been held up. And again, we only helped 1 or 2%. Like I think VCs can only do so much, but I like to think that we can kind of start to point to some of those examples in our historical portfolios, and that helps like us earn the right to talk to someone who's at that stage that we think has the possibility to be special.
Right, because if not all founders are great fundraisers,
right.
But if you can enhance them or enhance their fundraising efforts and
Totally.
their strategy, especially when there's little revenue.
Totally. And I think some founders are really good at fundraising like Series B and beyond that aren't necessarily good at fundraising for seed and A.
More numbers to point to.
Yeah, like I mean, one of my portfolio companies that's gone on to do some good things, and I would say at the seed, you know, there was like maybe 2 term sheets, and one of them wasn't like from like your name brand firm, so it was like us and another firm. And that situation, the founder was like really good in many respects, but didn't have like the seed part of the fundraising bit down. Now when this founder has fundraised subsequently, it's like an amazing job because like they can actually point to things that like, I'm not just telling you that we're doing this, we did this thing. And I think certain founders are better at different kinds of fundraising as well.
What would you say are the top 3 attributes that you look for in founders that you want to work with?
Definitely a couple things kind of come to mind. One, compulsive in a good way. And so, you know, an example of that is like one of my partner's companies had a good start as well. He was a founder who was like a sommelier who could fly planes and was like sleeping in call centers in order to understand like the insurance claims business. And that one was someone who was young and had no right to like build the large company that he's built in the space, but was someone who'd written like a large Notion doc that my partner Solly had seen before it was like as popular to like write Notion docs for this kind of stuff. And you would think it's someone who'd been in the industry for 20 years. And here's this person who's like in like their early 20s who's like written this like magical document that like really feels like they understand like so much about the business. And that's like an example of this like kind of compulsive, like in a positive way mentality. Obviously there's negative compulsions too. Another trait that I look for is, have they forgotten more than most folks have ever learned? And so in the example of like one of my companies, Smarter DX, like Michael was a clinician who could code and was the head of AI at New York Presbyterian before the AI wave. And so he understood the CFO, he understood the chief quality officer, which is his important role in hospital systems. He understood the physicians, obviously being one himself. He understood the medical coders. And like, that's someone who like, you know, when you talk to him versus like another founder in the space who's building, it's like not even a comparison. And so those are kind of two traits that emerge. I think the last thing is a little bit more, you know, like it's kind of not as easy to tell, but it's like, can they start a movement around themselves and around the company? And that's something I got from Mike. And, you know, it kind of manifests itself in a couple of different ways. Like inevitably, when you're an early stage startup, like trying to convince someone to join your company or trying to sell like a enterprise, like Fortune 500 company, what you're selling is like kind of ridiculous if you think about it. It's like a stupid exercise. Like, why the heck would this Fortune 500 company ever want to work with you? And it's in part because of founders' ability to kind of create a movement and help like their customers throughout the process. I also think on the hiring side, if you're talking to someone who's making like 3x more and you're asking them to like reduce a ton of salary, if you can create a movement around yourself and around your company, you give yourself the opportunity to like hire like the best people in the world. And so it's kind of those 3 traits are some of the things that we look for. We have like a little checklist essentially as we kind of think about investing, especially when we do more of the pre-seed type stuff. And usually when we feel like a founder is like a combination of those 3 things, then we can get to conviction.
I'm curious because a lot of people go back to business school for their networks and community, but now you can definitely build networks and community. I think being in larger cities and being around the right people or finding the right people. How much do you leverage your Stanford classmates or just the people you met while there in your current job?
Look, you got like, I don't know if business school's for everybody. For me, you know, I was in Texas. I was working for an energy company. I had like a small business. Like I just didn't know the people that mattered, like as it relates to the things that I wanted to be doing. And so for me, it was like one of the most important things I could have done because like I didn't feel like there was a good way for me to do so otherwise. And so to this day, my classmates are like incredible people. Like some of them are like, I know, like, I mean, this is maybe specific to Stanford, but like a lot of people at many venture funds like are classmates of mine. And so clearly it's helpful and on that dimension. And a lot of them like created like really interesting companies as well. In my class alone, you have Evolution IQ, you have, Vanavar, you have Archive, Resale, some, you have Osmind. And so you have some like good companies, and that's just in my class. And I'm sure I'm forgetting some others as well, Hallow as well. All these like interesting, like larger companies. And again, I'm sorry to the ones that I forgot about, but clearly like those types of people being around them is helpful. And so, yeah, I still leverage them. I looked at a company recently where a friend of mine is like starting to become like more exec-ish at like a fairly well-known company. And I could easily like kind of ask them about, hey, like, what do you think about this problem? And some cases are like, oh my God, that's super interesting. And a lot of cases are like, I don't get it at all. And sometimes they're too much in the, institutional kind of world and they're too much in like a large enterprise to be able to understand like what might look interesting for the future. And so I have to take some of those pieces of feedback with a grain of salt. And sometimes, they make good points kind of one way or the other as well.
It's a people's business.
It absolutely is.
Whether you're a pre-seed investor or a Series D investor, I feel like it really does come down to the people.
Totally.
Honestly, I could probably chat all day with you, but why don't we end with a quick fire round?
Sure, let's do it.
Okay, so what are people not talking enough about right now?
I think like public safety is one area I think is like particularly interesting as a go-to-market.
And what's one thing that you recently changed your mind on?
I think some firms, there's a couple of firms in particular, like Haystack and Definition, who've done a really good job of investing after the initial financing and kind of like having some things be de-risked. And I think in many cases, and hopefully in enough cases as it relates to my fund, where the first round of financing is like where the most alpha lies. And there's other situations where if you wait a little bit and see how things, develop, you can get like a pretty similar type pricing with a company that actually has figured out some meaningful things as to de-risk their company. And so, I think I was a little bit more headstrong about that kind of stuff before. And now I totally see those opportunities where it's wait, even though that's not our fund model, let's wait a little bit, even if we are like an early stage fund. And, we might come in like 6 months later at like a slightly higher price, and we can do that effectively as well too.
And what's a VC partner who you look up to?
I'll give an answer that's not the folks that I worked with, and just to switch things up, although
I should have clarified that.
Yeah. Let's see. David Tisch and Lee Fixel are people, I know David a little bit, Lee I don't, but I've just heard these stories about them being like maniacal in a good way about actually like they themselves are doing the cold outbound. There's this one friend of mine from business school that was like an analyst at the time of a deal that Lee was looking at Tiger. And this was a person who knew the company better than anyone, including the GP who did the deal, because they were like personal friends with one of the founders. And no one had called him. But I think Lee had found out that this person was like the closest connection to the founders. And like he was the only person in a very competitive situation to like reach out to my friend proactively. And that's just like an element of like, in a good way, and I mean this in the most positive way possible, like a maniac.
Yeah.
And David, to his credit, like, it continues to reach out to folks and do all the dirty work himself as well. Of course, he has a whole team to help him and augment him in that way. But I think there's just people who just continue to really want it despite making a lot of money. And I think those are the kinds of people that I really look up to.
I like that. Is there a company miss that you wish you had invested in that it didn't work out?
There's a real miss and a half miss. I did not get Perplexity. I met the founder right after the seed, and I just didn't get it. And I think that's going to be, if I did get it, we would have had the opportunity, to my earlier point, of like maybe paying up a high price for us and coming in before they kind of had raised their next round. It's possible, but I just did not have the wherewithal. Like when we were.
Oh yeah, you're probably thinking they're competing with Google.
Yeah, exactly. And even like
OpenAI
totally, and like even the NEA round, like I think the NEA round was like incredible, and there's a lot of rounds like that over the course of time that I think will be marked down in history. I think Mamoon's Series B for Figma, which he did at 250K ARR at 100 posts, 6 years ago. There's like certain investments that I'm like, damn, like that is a ballsy investment, and you're like really going for it and kind of betting your career on this investment. And you see some people doing that kind of stuff, and I think that's super interesting. So Perplexity is one. Another one where I had been meeting one of the Suno co-founders, like when he was like thinking through something a little bit different, and I knew he was special. And, TBD as to whether or not we would have been able to come in once it turned into Suno. But it was one of those situations where it's like, I met this person before. I feel like a lot of people were spending time with Martin. We became friendly and he was working on a couple different ideas. And I just fell asleep a little bit. And so it's a couple companies that are still early. They still have a lot to prove, don't get me wrong. But they're ones where even if the outcome isn't bad, I will always kick myself for a bad process.
It's also now you're learning more about your gut and intuition. When you have that feeling when you meet someone, or even if you feel that maybe this idea, if they don't get this right, they can pivot to do this.
Yeah.
And hopefully it'll work out.
Totally. And I'm pretty good at compartmentalizing. I give myself a lot of shit, to be honest with you. But from an earlier age, I used to be a suicide hotline counselor. And so I had to be able to compartmentalize crazy tough stories with my normal day-to-day life. And so I'm pretty good at giving myself a lot of shit, but also giving myself a lot of grace as well. But at the same time, if I hands up, I ran both of those processes badly, and TBD as to whether or not we would have been able to invest even at a price that we would have liked or whatever. But they were a bad process by me.
That story about the hotline, I wish we had touched on, but we'll have to save that.
Totally.
Thank you so much, Leeor. I really appreciate you coming into the office and joining Partner Path.
Yeah, thank you so much. I really appreciate the time. It's been great getting to know you as well.